Hi and welcome to FOREX. In this lesson, we want to look at 3 easy ways in which you can determine a profitable market trend. Now, the essence of going through these 3 ways is because our level of understanding, comprehension differs, and such. Any of these ways can be used in order to achieve the same goal. And first of all, we have the first method, which has to do with structural point, using structural point. And what it implies, for instance, in this market scenario, you will see price making a series of lower high, lower low, lower high, lower low, and we are thinking we'll be having a lower high something here now based on this particular movement. So this is one of the way in which we can determine our structural point using our lower high, our lower low, our lower high, and our lower low. So this is one of the structural way of determining a profitable market trend. So when price is making a series of a lower high, lower low, a lower high, and a lower low, what that implies is that we are in a downtrend. So a downtrend is when you're having a series of lower high and a lower low, while an uptrend is when you are having a series of a higher high and a higher low. So in this scenario, you are only expected to look for a sell entry following this particular method. And the way you will find entry in this method is very much simple. When price give you this lower high and it gave you this lower low, it means you'll be expecting price to pull back in order for you to continue with the sell, having established that it's in a downtrend. And one of the way you can do that is you can use your Fibonacci retracement tool. You connect it to the previous high that price has made. You can connect it from week to week or from the body of the candle to the body of the candle. So I'm using week to week. And as you can see now, price came all the way down and then price pulled back. So price pulled back all the way to this point. So whenever price gets to 50 level and above, you can begin to look for your entry to sell from that particular zone as far as this strategy is concerned. And in this scenario, price gave a beautiful pullback, and that pullback is what we have up to this zone. Of course, there is an imbalance that price came up to fill. You don't know what imbalance is, you can go to a video in this channel where we talked about imbalance. So this is one way, and then it gave us a candlestick formation, evening star, and a follow-up candle. Then we have our entry here and we move to the downside. So after our price gave you lower high and this new lower low. So what is the next thing? We'll now adjust our trend line to this zone. Okay, so here is our trend line up to this zone. So our Fibonacci. So now we have this Fibonacci connected to this particular zone. So what are we doing? Price is already at above 61.8 zone. So we want to see price give us a bearish signal, a bearish engulfing signal that will give us a confirmation or a bearish pin bar or an evening star that will validate our sell entry from any of these zone all the way to this point of 100. So this is one way in which you can do your analysis and find your entry. Number 2 is using trend line. Using trend line has to do with a connection of a technical tool. And what that means is that you don't necessarily need to get a higher high and a higher low. All you need to do, you want to see price movement from a particular zone such as this. It come down, okay, and then it pull back for the second time and then give a rejection from that zone. So what that means, you need only point B, point A and point B of price reaction. This is point A and point B of price reaction for you to connect your trend line. So all you need to do is you pick up your trend line and then you connect it to this point A and point B. Then you draw it into the future. Just as we draw it now, this is into the future. So it has point A and point B and we have it connected. Then we draw into the picture, into the future. So the next thing you want to see now is that you want to see price pull back to the trend line, and already, as we can see, price is at this trend line. So whenever price pull to your trend line, you will want to see an engulfing candlestick pattern, a reversal candlestick pattern, either a bearish engulfing, a bearish pin bar, or an evening star, depending on what is formed, in order for you to continue this sell to the downside. So this is the second way of you determining your trend. So the advantage of a structural point over this is that even if price break this trend line, in as much as price have not break this lower high structural point, we are still in a downtrend. So that is the advantage of using a structural point over this normal trend line, because here we have liquidity sitting here. So this price can choose to go here in order to take this liquidity that is sitting above this zone before it will continue to the downside. Then the third method of analyzing is our indicator, and the indicator I'm referring to is my Bollinger Band period 130 deviation is 2.0, shift apply to close. Now the moving average 25, shift is 0, exponential apply to close, and moving average 10, exponential, and then you apply to close. So this method is the third method of doing our analysis. And if you are to use this particular method, your first condition is for you to go to your H4 time frame. And on your H4 time frame, we'll be using our middle Bollinger Band line, okay, which is this particular line you are seeing. We'll be using this middle Bollinger Band line to determine our trend. And how do we do that? We come to our H4 whenever price is above the middle Bollinger Band line with an uptrend. When price is below it, is a downtrend. So once we have established that, we will move back to our 1 hour time frame. So now trend is established that we are on an uptrend. So we'll come to our 1 hour time frame and we will be looking for only opportunity to buy. So now how do we find our buying opportunity? So looking at this chart now, you will see that at this point price went up, now price pull back. So we'll be looking for a particular candlestick pattern, which is a bullish pin bar in an uptrend, to find a buy entry, and a bearish pin bar in a downtrend, or a bullish engulfing candlestick pattern or a bearish engulfing candlestick pattern. So in this particular scenario that we are having here, we have a bullish pin bar candlestick pattern. So this particular candlestick you are seeing, this is a pin bar. We have this first one here. You can see series of confirmation. You can see this rejection. This is a pin bar, another pin bar, and also this particular pin bar. So these are series of confirmation, and then we have this buy entry here. So it means you have determined the trend. You will now be waiting for price to pull inside any of this moving average, get a rejection, and continue to the upside. Here again we have similar scenario. Price pull back, we have this pin bar. You can see series of pin bar, and then you can have your buy and up to this zone. Okay, then again after that particular movement, price pull back again. Okay, here we couldn't get a move, here we couldn't get a move, and then price pull back here, and then now we have an engulfing. This particular candlestick pattern is an engulfing candlestick pattern which gave us an entry for a buy, and then we are good to go. And again, look at price pullback. We have a bullish engulfing candlestick. With this bullish engulfing candlestick, our entry is here, our stop loss is below, and we are on our way to the upside. So you can see how this works out beautifully well and how perfectly it is playing out following this particular strategy. Now this is GBP USD. Let's go to H4. It works on currency pairs as well. This is our H4, and price is above the middle Bollinger Band. This is the middle Bollinger Band, and price is above it. So we are in an uptrend. So we'll go to our H1, and then we'll begin to look for how to get our entry. Now this is our H1 time frame. Okay, so price is already on its way to the upside, and look at here, price pull back, and here we have a bullish engulfing candlestick pattern. So this particular bullish engulfing here becomes our entry for this buy trade, and that is how simple it is. After of determined trend, we want to see price pull back inside the moving average, give us either a pin bar or a bullish engulfing for us to continue to the upside. And then for a downtrend, series of confirmation here, and you can see how beautiful these are playing out. This is a bearish pin bar. You can see this sell. This is following the pattern and the strategy. Okay, so here after that, before we had this particular movement, price gave us this pattern, and then if you follow it critically, you can see that here this is a pin bar. This particular pin bar closes below. This gives us an entry for a sell, and would have been in that sell. So this is how perfect this works. Backtest it and share how profitable it is. I'd love to hear from you.